What's going on, traders? It is Will with Trader Society. As you can see, we are stepping up the quality. We are now professional as fuck. We got the new microphone right here. The mic stand's coming in soon, so I'm going to be holding it up for today. And with that being said, let me know in the comments below if you like the sound quality of this new microphone better. I haven't tweaked or adjusted any of the settings yet. I'll be doing that in the near future, but I did do some sound tests and it sounds phenomenal. So we're going to be doing a market recap. We're going to be recapping the price action of the market. We're also going to be going over how to trade the best setups at the best prices, new price alerts that I set, my trading plans moving forward. This is going to be a great video lesson. Do us a favor and make sure you smash that like button. Let's get right into the in-depth price action analysis. So first things first, we're going to be going over the SPY. If you watched my previous video on SPY, I was expecting a pullback. It did have a very nice pullback. Then it came back up towards this previous closing price. Then it formed a very nice double top early in the morning at around 10:30 a.m. Then it sold off very, very hard. If you just look at this chart, there was multiple opportunities for today. There was opportunity to buy puts right here, lock in profits on the dip, buy puts right here, lock in profits on the dip, buy the dip, sell towards the top, buy puts again, lock in profits towards the dip, and then buy the dip once again. SPY was trading in a price channel for the entire day, and there was very lucrative opportunities to be selling high and buying low calls and puts, right? Trading both ways. So with that being said, we're going to be recapping the market price action. I'm going to be going over the new updated setups in terms of the best setups to be trading. So one stock, and this ended up being a pretty decent alert. I was just very impatient. The problem with my trading today was lack of patience. That was the main problem. It was really lack of patience of letting the trade play out. I just did not have the patience to really hold these out today. One of the reasons was because I really don't like holding past midday. I don't like holding during midday. And especially with a same day expiration, I had same day expiration puts on the SPY. You could see right here, like I had decent alerts today, especially this one. At 10:32 a.m., I bought SPY puts. And then I quickly got out 7 minutes later. As soon as I got out, SPY ended up ripping about 50 cents above my entry. I bought the 439 strike at the money puts at the time. When I was trading at 439 right around here at 10:32 a.m. And then as soon as I got out, it started ripping back up towards the highs and then it sold off. I specifically remember in terms of like stock charts, I have a photogenic memory, and I specifically remember seeing this pattern where SPY has this morning rip above the previous closing price, comes crashing back down, and then it starts to top out. Once I noticed it was topping out right around there, I alerted the puts right here on the dip to 439. If I would have gotten a better entry, I still would have been in on those. But yeah, I got spooked out fairly quickly because it looked like it was going to rip, and I had the same day expiration. With those, you have to time them perfectly, and plus it was midday. I didn't like the timing of the trade as well, but I should have gotten back in once these bearish candlesticks came in with these lower highs, because SPY really did sell off hard, and those puts that I bought nearly at the low in the contract, these were the puts I got in at like $1.40. These right here, and the low was like in the 120s, and they shot up all the way to 345, and you could have bought them twice. There was two opportunities. The crazy thing is right here, they went all the way down to 70 cents on the dip later. Then they shot up to $3. Now they're back at 6 cents. That's pretty wild. But I literally bought those towards the low at the time being in the morning. Just got out break even way too soon. So anyways, in terms of the SPY, it did have that move down we were expecting. And it just traded in a channel the whole day. The SPY just traded in a channel the whole entire day. That channel was around, we're going to say 435.70 to 439.50, about a 4-point channel, right? Just bouncing back and forth, back and forth. Great opportunities for both puts on the rips and calls on the dips. And then there was another great trading opportunity. This one I got spooked out of. This was an L where I lost a quick 20% on. The problem with this trade was I broke my rules. I did not wait for the gap to fill. On SPY, I waited for the gap to fill. I did the right thing. On American Airlines, I did not do that. But the trade would have worked out absolutely fucking phenomenal. So it's very unfortunate how this played out for me. Again, lack of patience was the biggest struggle. And what I've noticed is, and this is going to be very important, write this down. If you're lacking patience with your trades, you're most likely either sizing in too big your expiration is expiring too soon. Maybe you're going too far out of the money. Your timing and your entry of the trade isn't the best, and you're aware of it. So you don't want to be too patient with it, because if you're patient with a bad entry, it can turn into a very, very bad trade, a very, very big percentage loss quickly, right? So these are all variables that can make someone very impatient. For me, in terms of my overall trading day, I was impatient today, not really because of my entry, mainly because of the contracts that I chose. I chose these contracts on SPY that expired the same day. They wore out the money, but I just really didn't have that patience. If I would have gotten a 50-cent better entry when I hit 439.50, then that would have been a different story. But it was mainly due to what I've noticed is, my lack of patience came from the contracts that I chose. These were some very risky contracts. I took a very big size on them, got out break even on the SPY. But if I would have went with a contract that was, that expired tomorrow or that expired 2 days from now, I would have been a lot more patient in that sense. So that's something that I want to focus on moving forward, is not making that mistake again. And if I do decide to go with a riskier contract, I can diversify with multiple contracts, or I can take a much smaller position size, let the percentage work do the work for me. But American Airlines, this is going to be a setup. I want to bring some awareness to this in terms of strategy, right? You can see right here, there was a gap to fill in American Airlines. Once it filled the gap right here, filled the gap, big downside potential, right? And then you could see right here, there was a gap to fill in American Airlines right here. Once it filled the gap, reacts as a resistance. Today's it breaks down, right? So it's at key major resistance. It's a gap close reversal, and there's a gap to fill below. This is what the best setup looks like. The only thing I dislike about this stock, so the setup is phenomenal, and it does look like we're going to see something like this where we really start to come back down to fill the gap, really start to come back down to fill this gap, right? So it's a great setup. The problem is I don't like the way the stock moves. I don't like its price action. Its price action is slow. It's choppy. It's not extremely volatile. The contracts can do well, but it's not like this amazing sort of big volatile move. And it's a fairly slow moving stock, and it's fairly choppy and kind of inconsistent in a sense. So that's the only thing I dislike about it, is just how it moves. It's not like a super fast mover. Other than that, though, this was a great setup. The mistake I made with this one, I got in before the gap filled. Like I tell you guys all the time, if you're interested in playing the first red day and shorting the stock on the first red day, it's a great strategy. You could see a gap down. It had the first red day, and then it started pulling back even more at the market open before ripping. Best thing to do is wait for it to go back to the previous closing price. The previous closing price was $19. Once it fills that gap, you see it react as a resistance, see the lower highs coming in, the breakdown coming in, right? When you see these lower highs coming in, it's not going back to 1910 anymore. It's going back lower to 19. When you see that, it's going to have a gap close reversal on that first red day. Then it's going to start to fill that gap below. And the pattern that I was looking at this in terms of puts, I was looking at a very similar pattern on a Friday, where this just had this morning rip and then it just sold off, right? Very similar thing. It just, instead of having that morning rip, it gapped down first, had a little morning panic, then it had the morning rip, had a gap close reversal. You could see a very nice gravestone doji come in here on the 5-minute before it sold off hard. So this is like a great setup where it's going to continue to fill the gap below. I think it's a great passive income play. So what is this setup? This is multiple things. It's called trend stacking. There's a gap to fill here at 1934. It fills the gap. It has a reversal. That was the fucking time to enter at 1934 at this gap fill level right here. I wasn't watching it at the time. I was watching it today. I had a student put me on to this one. So it filled the gap. It had a reversal. Key major resistance, right? You could also see there's a gap fill right here at 1882, right? When that turns into resistance, it really sells off. You can see it's major resistance. It likes to quickly come back down to fill the gap below. It likes to quickly come back down to fill the gap below. You see that towards this resistance, comes back down, fills the gap below, towards this resistance, comes back down, fills the gap below. You have a gap to fill all the way below at 1713. You have this bearish pin at key resistance, this gap close reversal. And then today you had another gap close reversal with this bearish pin. It's like this HPQ setup all over again, where it just has this, gap up, goes towards resistance, and then it really starts to come back down to fill this gap below in a sense. So American Airlines is that gap close reversal, that key resistance to go back down to fill the gap below. So I think within some time, this is really going to sell off back to low 17s. As of now, we're going to be on track for 1786. Once 1786 turns into a resistance level and breaks down, then we really start to fill the gap below at 1713, which is a key level of interest to dip by this stock. So yeah, I think the puts are going to continue to print if you're patient with them and you're playing it safe. You're giving yourself, I would say, about 11 days would be a decent expiration. You stay out the money, play it safe. This should be a great setup where it just continues to fall within time. So I'm going to be keeping an eye on that for a passive play. But it's kind of already played out in a sense. Just kind of wanted to go over some of the basics with that strategy. So in terms of like upcoming plays, and in terms of what I'm seeing, you could see we got a triple top here on Ader stock. Very nice triple top coming in here. If it breaks above this 650, we're going to be on track for $8 this week. If it fakes out again, we're on track for $5.75. Overall, it's bullish and it's trying to break out. The squeeze has triggered right around here. Ever since the squeeze triggered teal blue, it's been rocketing up. So that's beginning to look bullish. Look for the breakout above 650 on that. That's make it or break it. Walmart. I'm telling you, this watch list, man, we had some banners on the watch list today. We had VERU officially having the first red day prior to a massive run up. This could be a bloodbath. Gap to fill at 1494, which is the best resistance to buy puts at for today for a crash to 1350. If we crack 1450, I'll be interested in adding to puts. That was a phenomenal put opportunity. Airbnb, I think that was a great put opportunity. Neo, look at this watch list. Neo, it's the best resistance to buy puts for the day. If 1950 cracks, I'll be interested in adding to puts. Once we crack, expect a pullback to $19. Walmart, if 157 can crack, I'll be interested in buying puts for a pullback to 155. This is trading at an all-time high resistance, and it's failing to break out multiple days now. Looks bearish on the daily. So this watch list was a banner. There was plenty of opportunities within it. You could see even Walmart, once we cracked that 157 level, what did it do? Once we cracked 157, it sold off hard to 155s. So make sure you're aware of this watch list. So the best opportunities are going to be within this watch list, and you can make your own trades based off this watch list, right? Just look for the key reactions. It literally went to 155 as we were expecting. The puts printed like crazy on that one. So for that setup, I was looking at this chart, right? And I'm saying, there's all-time highs here. When it turns bearish, it sells off very quickly to the 153 range. And you could see you got a bearish pin right here. You got a bearish pin on Walmart. This is bearish, trend reversal candlestick. And then it follows through going green to red, which is a bearish move. And then it's going to start to fill this gap. You have a gap to fill at 153, which is where I want to see how it reacts towards 153. So overall, Walmart should continue to sell off. This is a bearish chart. Same with American Airlines. Within some time, it should continue to sell off. And then we had VERU with the first big red day. Like I said, today could be that bloodbath. Right here, today could be that bloodbath. And once this cracks 1450, expect to crash to 1350. That was a phenomenal setup. This went all the way down to 1190. It's not that shocking considering what happened right here. When it had its first red day, it went from 1387 all the way down to 960, right? So in terms of this one, this is very bearish. As you can see, we're having a small move up in after hours. I'm going to set a price alert for $14.95. That's still the best price to be shorting, but that was another great stock to buy puts on. So pay attention to that first red day strategy. Sometimes with the first red day strategy, they're not going to go back up to the previous closing price like American Airlines did. But if you get in on puts early, just know your max risk is going to be that potential to get squeezed back up to that previous closing price. But typically that's where the top is. The top is typically at that previous closing price on the first red day. When they gap down, if it rips back up, the high of day, the highest they'll typically go, because they like to stay red, especially if it's prior to a big move up, is that previous closing price. So always keep that in mind. Sometimes they don't go back to there for the short term being. So you can do like starting positions. You just have to understand your risk involved is that previous closing price, because they can shoot back up towards that. And then we had Neo from the watch list. So I would say the watch list was a banner today. And there was some fairly good setups to be trading. I just was not on my A game in terms of like patience. If I had patience with SPY, today would have been an amazing day. It would have been 100% return on those puts within like an hour and a half. So Neo recovered. I've noticed when Neo crashes, it likes to recover. So the game plan is 1965. We go back to 1965, react as a resistance. It's going to be put city on Neo. That's going to be the game plan for the gap close reversal. So Neo stock had a gap down. We want to see how it reacts towards previous support. If previous support turns into resistance, then we're going to look to play puts at 1965. It's going to be a great setup to keep an eye on. Neo is going to be the top watch for tomorrow, along with Ader. I want to see how it reacts towards this triple top. If it breaks out, we're looking at a push to 8. Let's see. During after hours, it is down a little bit. In terms of Apple, Apple is at 166. Yeah, this really, for the bears to remain in control, it needs to stay under 165.70 to 166.50. If not, we're going to see a shift and reversal for Apple stock. I'm going to keep an eye on that. That's an interesting chart. And then in terms of Tesla, we're waiting to buy puts towards $1,022.37. There's a gap to fill here. High end is towards resistance right here of this channel. Want to see how Tesla reacts towards that key range, that key resistance range. CEI had a little gap up today. Overall, I would stay away from this one. It looks pretty bearish. And that's kind of where we're at. So like in terms of the SPY and everything right now, looking at the daily on SPY, it's kind of tough to say where we're going for the micro with this whole candle right now. I would say by the end of the week, we're going lower because it's already turning the previous low of last week's channel into resistance, which is bearish. So we could see some micro bounces. But I think overall later into this week, we're going to drop lower on the SPY. I do see us going lower on the SPY. So, yeah, I would say the main plays I'm going to keep an eye on. So I really don't like American Airlines just because of the price action. I don't like the way it trades. It's too slow for me. I'll keep an eye on it though. But I would say in terms of like top plays that I'm looking at right now, Neo, since Neo recovered and it's already pushing back up towards that gap fill, that best price, Neo puts are going to be on my radar. I do want to see how it can react. It's going to be interesting reaction. So yeah, at the moment, there's not too much that I'm watching right now, but I'm sure something's going to pop up very, very good heading into tomorrow. There should be something great. So I'm just going to be keeping a close eye on the SPY, keep a close eye on Walmart. Hopefully VERU can spike back again. I mean, that would be great. You can see right here, it had this big red day. It spiked right back up. So hopefully we can get a gap fill to 14.95 to play puts again. But yeah, overall, those are the main setups that I'm going to be watching. Thank you guys so much for staying until the end of this video. Make sure you like and subscribe to the channel. If you do want to be a part of Trader Society, that's going to be that first link down below in the description. Once you join, you do get instant access and you do get lifetime access to everything listed in the description. You click that first link, it's going to explain to you everything that's included within the program. Just to give you some background, you will get lifetime access to the video lesson library where you'll learn all the gap trading strategies. You'll also get access to the risk management and position sizing and psychology and mindset to trading, all within the video lesson library. You also get access to the chat room, to the daily live trading streams that we do at Market Open. And there's a lot to it. You can send us one-on-one direct messages. You can talk to us within the chat. We have some phenomenal members within the chat. I'm telling you, we have some people in there who are absolutely killing it. So you can network with those individuals as well. So yeah, if you do want to check it out, it's going to be that first link down below in the description. I will see you guys tomorrow live at Market Open. You do also get access to the watch list, to the stock analysis, the real-time stock analysis, and the watch list that's posted in the morning. So with that being said, I'll leave the link down below in the description. It's going to be that first link, and I will see you guys tomorrow live at Market Open.